Hello and welcome back to London. The latest unemployment figures show the jobless rate held steady at 7.8%. But what does this mean for the UK economy and also the direction of the FTSE? Well, I've been speaking to Mike van Dulken from Accendo Markets. Well, Mike, it's always great to come and see you, but I'm struggling to get excited about these unemployment numbers. They're just pretty flat overall.
Yeah, no real surprise at all. The ILO rate flat at 7.8%, slightly better in terms of number of claims dropping by 8.6 thousand as opposed to a 5,000 drop. But still really the worry is the wage growth being just far too slow when you compare it to inflation, which even though it's cooled a touch, people just still aren't earning enough. Yep. And there was much discussion afterwards pointing to the employment data has been improving, but the output is just not growing. And that gap is just being explained now by people being so desperate to have a job, they're prepared to take a wage cut, which is just increasing the circle and making it a bit more vicious.
Yeah, but can we spin the low inflation growth in a different way, in that shows the flexibility of the UK workforce where other countries may not have that?
It should be the case, absolutely right. I mean, I think we've discussed before, it's much more difficult to get rid of somebody on the continent. France is a good example. But don't forget these people who are taking a job with lower pay, they're feeling less inclined to work hard. So the output is ultimately suffering, and that's feeding through to our extremely low GDP figures, although the NIESR estimate for the last 3 months came out a lower figure than the previous month, but the prior figure had been revised up to 1%, which is good news, but there's still a lot of work to be done.
Yeah, if we look back at the last 6 months of interviews that we've done, there was definitely a common theme in that we look at the UK unemployment situation, it's not very good, pretty flat, same with GDP growth. Yep. Are you seeing any signs of things picking up?
Ever so slightly. We've had an improvement. Don't forget, with this data, while we focus on the month-on-month changes, we can also look at the year-on-year. And of course, the further we move forward, the more we're moving away from the real tough times, in which case that trend should improve. But we're still seeing the output figures. I mean, they were better in terms of industrial and manufacturing output. But again, we've got the pressure from currencies, etc. So there's not just the one headwind. There are several, and it's quite a fight.
Yeah, just to switch off attention to the FTSE now. I get your market commentary every day into my email inbox. But to give our viewers more of an insight, where do you see the FTSE moving now? Because obviously we were really trading high, moving up towards those .com highs, but now we've really started to drop back down again. So where do we go from here? Yeah,
I mean, that correction's been pretty tough, although if you look at it, we've not hit 10% correction yet. So compared to somewhere like the Nikkei, which is officially hit bear market territory, we could have a little bit of way to go. And I think, as you'll have read, at around 6,360, a little bit of a rebound today, we still yet to breach the falling trend line of resistance from those May highs. As you say, they weren't far off the .com highs. So until that breach comes through, there is potential for us to revisit a bit lower, potentially down to 6,220, which would be the lows of April, from where we could see a revival and a resumption of that 4-year uptrend we've seen from the crisis lows.
Yeah, just to finish off, what is driving sentiment in the markets at the moment? There's lots of speculation over tapering and things like that. Is that just market chatter, or is it just a case that positioning has changed?
I mean, positioning is all over the place, quite frankly. The concerns about whether the Fed would start to turn the tap, and not turn it off, but just turn it back slightly, has just got people absolutely terrified that it's the beginning of the end strategy or end game. I think that's far from the case. They've got a long way to go before they can say no more stimulus, no more intervention needed. It would be madness. However, you've got markets are so hooked on the presumption that that intervention will be around for the foreseeable future. Any idea that we might be closer to the end gets people worried that the market prop is going to be pulled out from under these markets and hence the correction we've seen. So there are some theories out there that the language used by the Fed members talking and these fears out there are just to take the froth out of the market, which makes sense given how far we had moved up and so quickly.
Well, Mike Van Dulken from Accendo Markets speaking to me there. Stay tuned to Dukascopy TV for more interviews, but for now, goodbye.